Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top stocks today, some of the top percentage gainers. And so all the stocks in this video had really nice days today. And so first up we're going to look at AKCA. So yeah, this closed up 38%. This has been a really big move for the stock. Okay, so it's at $28 right now, RSI at 73, Fasto at 93. So it is in the overbought power zone of both indicators. You can see here, look at the giant volume spike behind today's move. There was a gap up open, so there is a space between high of day yesterday and low of day today. And today's candle did bust through that upper Bollinger Band. If the upper Bollinger Band is currently at 25.46. On a pullback, that first support level is down here at EMA 4 at 23, and right here at this 23.50 closing price on the 30th of January. Okay, so yeah, this is a really nice move. And so when the stock's breaking out, what we like to do is look at the weekly chart to try to find the next resistance levels. And as you can see here, this has only been trading since back here in July of 2017. So this is the entire history of the trading of the stock. And so right now it's coming up to this October 2017 close. That's the highest close ever. And so it's right at that level right now. And so what bulls want to see is a close above that level. If it can close above that level, that's going to be the signal that it wants to head higher. And then you're looking at up here at this 30 level, and then the 30 just above 31. That's the all-time high, the top red line there. So yeah, so it's what you're looking for now is a close above 28 for the week. This week's candle will set on the closing bell on Friday, and then it needs to stay above that level to push higher. Now that it's come up to this level, if it fails to break 28 and that level turns into resistance, you could see the candles work back into the bands, and once again you have this 23 level that would be the first major support on a pullback as far as the moving averages go. And then you have this high close here that it's breaking out above from January that we just discussed. And so that would be, you know, the downside risk is if it doesn't break 28, that it could pull back to 23. Okay, let's look at DELT. So this was alerted last night, so congrats to everybody that caught the video. It closed up 25% today. So yeah, we were, it was setting up, and yeah, yesterday was the clue that it was getting ready to go. And so you can see here it's at 72 now on RSI, 96 on Fasto. You have a crossover starting on ADX with the green line plus DI crossing ADX, the black line, to the upside. And so yesterday the bullish move was the close above the top of this channel. There was a channel that formed, very tight channel, sideways channel here, and the top of the channel was right here on this candle on the 14th. And so yesterday's close was above this red horizontal resistance line. It was above the top of the channel and also above the 100-day simple moving average at 125. That signaled more upside potential, and boom, you were rewarded today with this big move. And notice how, I mean, it was the same low volume, and the only thing that was different is it closed above resistance. So take note of that. A close above high close horizontal resistance many times signals a move higher. And then today we are looking for a close above the 300-day simple moving average at 143, and it did close above that level. So that was really cool. It got above, the 250 and 300-day simple moving averages. So now it needs to stay above the blue line, above 143, to head higher. It needs to break this 160 resistance zone, and then you have this 180 closing price here on the 17th. And then if it can get above that, you're looking at this 225 level. So keep an eye on it. If it can stay above 140 and get above 160, it could keep pushing higher. Another one to look at is BIOA. This was alerted yesterday as well, closed up 8%. So congrats everybody. This needs to get above 30 on RSI. This did get delisted to the over the counter. It had the big pullback after the delisting. Yesterday's clue that this was heating up was the close above the dotted purple line. That's the middle Bollinger Band. It was the first close above that level since back here on the 30th. And so that was a bullish change in trend. And then today you were rewarded if you loaded yesterday with the nice move. It did run up to that upper Bollinger Band at 0.07. The big level to break is the orange line. That's EMA 13 at 0.066. It says 0.6 here. I think it's like 6.6. If it can get above that level and close above, that's going to be your signal that wants to head higher. If it fails to get above that level, and especially if it drops below the middle Bollinger Band at 0.05, then it will no longer be in play. Notice how the pink line is crossing the green line to the upside. That's an early reversal signal. It could start a reversal here. It just has to get above the orange line. Keep in mind, DELT MTP and BIOA are both in the specialty chemical material sector that has been really hot lately. Okay, let's look at DXR. This closed up 71% today. You know, our RSI is at 86. Notice the big pullback on Fasto. That happens when a long upper wick forms in the candle. So check out how this ran all the way up to 22, and then it pulled back really sharply. Now alerts were put out at high of day in our chat that this was the lock and gains level. You know, I was trying to warn people that were loading up here in the 17 range. I'm not sure if they took the warning or not, and maybe it'll work out for them. But when I see the long upper wick start forming like this, especially when the candle's on a multi-day run and then it's pushing well above the upper Bollinger Band at 938, this is a signal, in my opinion, to lock in gains. If you look down here at accumulation distribution, look at the giant spike down. They use that run up to 22 to dump a bunch of shares, and so yeah, that's not exactly what you want to see on a breakout. Now keep in mind there is very good news. Okay, so this was good news, and if they refrain from dumping more shares, this could push higher. Now if the candles, the problem with holding is the candles could work back into the bands, and the first support level is down here at 910. So yeah, when it was pushing, you know, 18 to the 20s, you know, and having the downside risk of being 9, you know, that could be a 50% haircut from that high. So that you know, that makes it a risk to hold overnight, in my opinion. You know, we're short-term traders. We're just looking to lock in gains, and so basically, yeah, if you're still riding it, what it needs to do is push out. I'll show you the next resistance levels on a pullback. You know, 910 is the key level to hold. If it drops below that, then that would signal the chart is broken. Notice the giant volume spike. I mean, look at the average daily volume. You know, this thing's had no volume. I know it did have some good positive clinical data that looks very promising. And so if you look here at the monthly chart for DXR, you can see it's hitting levels from a long time ago. Look at the volume today. Huge volume this month. I mean, there's been giant volume. Each candle represents 1 month of trading. And so it's breaking out above the high close for the month of, or for the year of you know, last year, 2017. And then all the way back, you have to go, where is it at? Now it's all the way up to 2006 levels. So you have to go back to 2006 to see the last time that it was hitting this level. It's breaking the high closes for all the other years from, you know, for the last 11 years. And so, yeah, or 12 years. And so basically what it has to do is get above this high close from April of 2006, and so if it can bust above 14, that would be very bullish, and then that would put this 16, 15 level. It's this 2004 June. It looks like June, July 2004. You know, back 2004 high close, we'll call it, in the 1650 level. Notice how it broke above those levels inter month. You know, and that happened today, and then it pulled back. And so the bottom line is if it struggles to get above 14, it could pull back. This month's candle is well above that upper Bollinger Band, and so you have the main support levels inside the Bollinger Bands is down here at the 200-month moving average at 960. It is breaking above all these levels. Notice how they dropped it all the way down. They ran it all the way to the ground, and then boom, they bust out the good news today, and years of losses are wiped away in one single day. Pretty amazing. So yeah, when that happens, you know, we'll see if they, you know, it looks like they have a history of selling shares with the long-term downtrend, and so we'll see if they can, you know, notice how it's breaking out above the top of the channel, and so yeah, we'll see if it can continue. If you look here at the 15-minute chart, you can see how it broke out. It started yesterday. This was the clue that it was heating up, and then today it continued, and then once it got below this, you know, middle Bollinger, or below EMAs 4 and 8 here, that was your signal that the intraday strength was breaking down, and then when it got below the middle Bollinger Band, the dotted purple line here at 230, that was a big red flag, and so this signaled that this uptrend was broken, and now it's in the bearish lower Bollinger Band channel. It needs to get back above the middle Bollinger Band at 1650 zone in order to get the new uptrend going. It has to break above the high close, which is up here at $20, to break out higher. If it struggles to get above that level, and it struggles to, you know, it's basically, you know, this middle Bollinger Band up here is a big resistance level. If it fails to get back above, that's going to signal downside downside risk. You know, the next support level is going to be down here at the 50 simple moving average at 1160, and so that's going to be the big level ahead. It's heading down to that level now. If that breaks, then the next support level is down here at the 100 simple moving average at 857, and then that's lining up with the $9 that we were talking about on the other charts. Okay, another one to look at is KBSF. As you can see here, it closed up 46% today. So this is another one that had that really big intraday move, and then it pulled back, and it did form the long upper wick on today's candle. Now keep in mind, this was the annotations on here are old. This is the last time we made this, last time I posted a chart on KBSF. We were looking at this high close here as the key level to break, and that did happen here in February, and it temporarily got above, and then it pulled back below, and today it's back above that key level, and then it also broke other key levels. It broke the high close here in February, and then it's also above the key level in November, the second key level to stay above this $6 resistance zone. And then right now what it's struggling with is this November 825 or so high close resistance level. If it can close above the closing price on the 8th of November, that's going to be the signal that it wants to head higher. It has to get above that level. That's the recent high close, okay? If it fails to get above that level, the candles could work back into the bands. All right, today's candle did close above that upper Bollinger Band. What you would see is a drop down to 588. That is the EMA 4. You want to see that level turn into support. That was the top of this. That was the high close for February, and so you want to see that level. You know, the candles keep pushing above 6. You know, it'd be a red flag if it dropped below that. Upper wick is a red flag. If you look here, this has a history of making upper wicks, and so those are all signs of dilution. If you look here at the volume spikes, most of them are followed by red candles. So you have the bigger one on the second day, and that's a red candle, and then you have the big volume spike, and then the red candle. So more than likely, there's going to be a red candle tomorrow. I mean, look at the last time it had a really explosive move like this. That was the following move. So tomorrow, if you get lucky and there's a gap up open, you know, because this gave everybody a chance to get out on this candle. You know, once you start seeing a black candle forming, you know, if it gets up here or it's up above, and then it starts pulling back below the open and a black candle's forming, that's your signal just to lock in gains. Don't mess around on the black candle on a stock like KBSF. Okay, if you look at the weekly chart, you can see here it's trying to break out on the weekly chart. It has a nice uptrend going. That middle Bollinger Band is holding. You can see that's this dotted purple line here. And so as long as this middle Bollinger Band keeps holding, that signals the uptrend's intact. It's turned the 50 and the 100-week moving averages into support. It's breaking out above the November 2017 high close. That's the key level. That's that $6 level again. It needs to stay above. And then you have this February 2017 high close. That's the key level. If it can get above that, then it could head up to that above $10, which was that January or the February weekly high close. It hit that level and pulled back. So that is the target if it can break above this, you know, stay above 7. You know, it could run up to that $10, $11 range. That's the top of this, you know, for 2017. If it gets above that, then it could really get moving. Then you're talking about 20. You know, we'll just see. Right now, it does have a good uptrend. It is busting through the upper Bollinger Band, and then as you can see here on this candle here, it closed above the upper Bollinger Band. Red candles followed, and it worked back into the bands. A white candle formed above the upper Bollinger Band, then a red candle formed, and it worked back in, and then here you did have a white candle closed above, and then another white candle closed just above, and then it worked back in. If you look up here, same thing, a white candle above the upper Bollinger Band, then a red candle up here, a white candle, then a red candle. So if history repeats and this closes above the upper Bollinger Band, I would expect red candles to follow and the candles working back into the bands. Look at the big volume spikes. Red candles, red volume bars follow usually. So yeah, so we'll see. You know, there was a couple of green ones in a row right here, but yeah, we try to look for the historical trend. And then if you could see here, this had really tight Bollinger Bands, and then it broke out, and then you could see the pullback. We did put out alerts here at the high of day that this was topping out, and to look to lock in gains. And it just so happened it was just right at the high of day level, and then you could see here the big red candle followed, and then once it got below, okay, this candle signaled to get out. It was below EMA's 4 and 8, especially because it's KBS KBSF, look at the average daily volume. You have to get out of these things when they break down because there's no volume on an average daily basis. And so they're using the run to dump shares. That's what they did right here. It got below the middle Bollinger Band, that signaled downside risk. Now it has to get back above the middle Bollinger Band at 818 to head higher. As you can see here, the 50 simple moving average at 630 is the next support zone. Back in our chat, this is what where I posted the alert. This is our chat here, and you could see this is the original. You could see the time, Thursday. Okay, this is at 2:30 Eastern Standard Time, which was 11:30. I'm on the West Coast, and so you can see here it's at high of day. You know, it was up 131%, 11:45. You know, the high was 11:50 at the time, so it was pushing that high day level, and the alerts were put out. You know, to as you can see here, this was today at 11:30 a.m. You know, this is a sweet breakout, but I would sell before the close of trading. Fasto's maxed, RSI is very overbought, and then this is the chart that I put out, and and then you can see the close. You know, and then the close is way down here. It closed up. So a lot of the gains were knocked away. These are the type of alerts that I put out all through the day. I know it's not typical for other people, the way other chats may run, but I give out technical analysis with key support and resistance levels. So if you'd like to check that out, please come join our chat. I'll post the link below the YouTube video. If you look here at MTP, it had a really nice day as well. It closed up 20%, 28%. RSI is at 63. You have Fasto at 82. Check out the bullish crossover here on ADX. So it's really heating up. This is another one of those thinly traded stocks. Okay, the reason why it made our radar is because it closed above the key levels. It got above the middle Bollinger Band. Okay, EMA's 4, 8, and 13, the middle Bollinger Band, the 50-day simple moving average, and the 100-day simple moving average. So going forward, if it stays above 115 and that 100-day simple moving average, notice how it failed to break before. That's going to signal that it wants to head higher, and then it could run up there to that 200-day simple moving average. That would be the next simple moving average to break, and then we look for a break above that high close, and that would be up there around 147. So just keep an eye on this. Notice how it broke out of this sideways channel. So it had a sideways channel here, and then it busted out of the top. Many times they will break out higher. Okay, so keep an eye on 147, and then look at SMRT. This is another one that broke out. You know, so notice how you have RSI up here at 78, but then look at Fasto way down here at 36, and that's because of this nasty long upper wick. Okay, so this is when you're trading, especially when you have a gap up open. Notice how there's a space between a high of day yesterday and low of day today, and then also hit the blue line. That's the 300-day simple moving average. When you see it pull back from there and a long upper wick forms, that signal is just head to the sidelines. It's not ready to go. It's a risk. Okay, if you look at accumulation distribution, check it out. It fell off a cliff. Look at shaken money flow. All right, so they dumped heavy. These penny stocks, you know, they're gonna dump into the rallies because they're broke and they need the money, and they sell into runs. So keep that in mind. These are just trading vehicles. Most of these are not investments. These are just quick trades. All right, so the bottom line is when it pulled back, that was the signal to get on the sideline. If you didn't, once it broke below that 300-day simple moving average, when it's trading above and then it pulls below, that's another signal to exit. Another signal to exit is today's candles floating above the upper Bollinger Band. The upper Bollinger Band is down here at 102, and then you have the EMA 4 at 99. If it drops below the 200-day simple moving average at 117, that 100-day simple moving average and EMA 4 are on deck. If it drops all the way down to that 50-day simple moving average, it would fill the gap. That is the downside risk, is that it pulls back to fill the gap. That's many times what happens when gaps are created on for penny stocks. Okay, notice the average daily volume is pretty much the zero. Okay, and then the volume picked up today. There was a huge volume spike, and look how they sold it off. When you see this type of pattern, it's a signal that they're dumping into the run. Okay, it did get a nice technical bounce off the middle Bollinger Band, but you see a bear flag formed here, and then it dropped back below the middle Bollinger Band. If it doesn't get above 140 tomorrow, that's the middle Bollinger Band. That's going to be your signal. Okay, this is not happening, and then it's going to come down and test that 50 simple moving average at 116. If that 116 fails to hold, the downside risk is it comes down and tests $1. All right, the gap, as you can see, is way down here at the 200 simple moving average at 186. There's a space between high of day yesterday, which is over here, on that open, and then down here on low of day today. And so a drop down to 86 and the 200 simple moving average would fill the gap. Okay, check out ISNS, closed up 44% today, and so this is breaking out. This is kind of another one of those stocks. A lot of these have this similar kind of pattern where they had nothing going on, and then all of a sudden out of the blue it's gapped up and running. This is this is the time of month where it's just an interesting time of season where sometimes we get these penny stock rallies. And so right now we've got this gap up open going on with the well above that upper Bollinger Band. If the candles work back into the bands, you're looking at EMA4 at 359 as the key level to hold. If it drops back below, the 200 and 300-day simple moving averages are down here in the 320s. There is a big gap between high of day yesterday and low of day today. If you look here, the top of this previous sideways channel is right in the 350s, and you want to see that level hold once there's a break above that November high close. If you look here at the ISNS weekly chart, you can see the breakout, and so this is the high close from back here in 2015 is where it's hitting right now. And so if it can close above this 440, 450 resistance level for the week, that's going to be a very bullish signal, and then it could head up into the $6 level where this open was from back here in August of 2016. Now what you want to see is a close above the blue line. That's the 300-week moving average at 398. So a weekly close above $4 would be very bullish, and then you want to see it stay above 4 going forward. Okay, so this will be really key. If it fails to get above this 430, 440 resistance level, it could form a temporary top here and pull back to test that 300 simple moving average. If it drops below the 300-week moving average, then the candles could work in the bands, and the downside risk is it has EMA4 at 359 as support where it could drop to. Now you want to see it stay above this July 2017 high close. Once it breaks above a high close, you notice how this was a major resistance level in this 383, this 390 level. You want to see that level turn into support. Okay, check out FLKS. All right, so this has been on a nice run. It's up here at 84 on RSI, so it is getting frothy, and you can tell here, the red flag is the gap between high of day yesterday and low of day today. If the candles work back into the bands, they're going to fill that gap. So a drop down to EMA8 at 566 would fill the gap. For penny stocks, gaps on the chart usually get filled. Not necessarily for a stock like Amazon or Walmart. I don't know, some large cap stocks, they don't always fill gaps. Especially like if they have a gap up open on earnings, that type of thing. But as far as penny stocks go, the saying is gaps get filled. And so with this long upper wick on today's candle, it is a red flag that it could pull back into the bands and fill that gap. And so it is the signal when that forms to take caution. There was only a slight downtick on accumulation distribution, but nonetheless, this is showing that they were taking some profits. So as long as EMA4 at 626 is holding, the chart is super strong. If you see it drop below, the downside risk is it drops down to 575 and fills that gap. If you look here at the FLKS weekly chart, it's making a really nice move this week. Okay, so last week it closed above high close horizontal resistance. That was the closing price from back here in June of 2017, and so the close above that level was very bullish last week. That was signaling that it wanted to head higher, and this week it's now above the 100-week moving average at 606. So you want to see a close above that level for the week. That is the top moving average on the chart, and so if it turns into support, this is on cruise control. It's a very, very strong chart. So you want to see that hold. Candles keep riding EMA4 at 566, and then a break above this November high close from 2016. If it can stay above 7, that would be really bullish. Notice that was support from back here in 2016. Support had turned into resistance, and now it's at that level. So it's all about breaking 750 and staying above $7. If it can, then it could possibly work back up to this previous resistance zone. Okay, so that's a nice chart. Let's see if it can follow through. Let's look at RXII. So this is another one, that we've been following. It's up 12% here, and so once again, it has that long upper wick. So let's just look at accumulation distribution and get it over with. That's not what you want to see on a day that it stocks up. They're dumping. Look at the history. Okay, so down. You know, they sell shares. That's what they do. Look at that. It's dilution. I mean, what company is this? This is the you know, a pharmaceutical biotech company. Where do they get money? They get money through selling shares. That's how they make the money. So that's why you can rock it while it's running. But you have to lock in gains when you see key signals that the chart is topping out. And for this RXII chart, the big level is that 300 simple moving average. It got above that temporarily intraday, and it hit the prior key resistance levels and failed to break, and then it pulled back. And so that was a signal of a temporary top. Once it trades, anything trades above the 300-day simple moving average intraday and then pulls back, especially if it closes below, you know, that's a signal that it's a temporary top and to go to the sidelines. More times than not, you will be very, very happy if you sell at the 300-day simple moving average. If you learn anything from my videos, take that, because you, more times than not, you know, if you locked in gains anything above that 300-day simple moving average, you were money. It closed all the way down at 5. So you know, it's going to happen more times than not. Now, if it closes above the 300-day simple moving average, then you can keep riding, but you use that as your stop loss level, and as if it drops below, then you exit. So now it needs to get above the 200-day simple moving average at 529. If it can break that level, then it could head higher. It's just all about getting above that 300-day simple moving average. Now it's above that 100-day simple moving average at 485. It needs to hold that level. You know, if that breaks, you know, you're looking at EMA 4 at 438. Has a really good uptrend going. It just has to get through that 200 and 300-day simple moving averages. If it fails to break, then that would signal possible consolidation. Okay, take a look at BZQ. I'm going to finish with a couple of ETF type plays. And so check out Brazil here. I thought this was interesting. This is ultra short Brazil, and so this is betting on Brazil going down. And so check out how RSI is at 52, Fasto's up here at 90. Check out how the green line's starting to break out, plus DI. You have minus DI dropping. ADX is starting to hook. And so today there was nice follow through on the daily chart. There was a close yesterday above the middle Bollinger Band, a close above that level last week. That was a signal that was heating up. You know, middle Bollinger Band support broke back here in February. It was trying to get an uptrend going, and then it broke, and then it last week was your clue. Okay, it's heating up, and then yesterday was that second close above in a short period of time. Many times that signal is ready to go. Today it followed through, and so what we're looking for now is that 50-day simple moving average at 727. I mean, it seems like if there's just more and more chaos in the White House, that emerging markets are going to be under pressure. The picture isn't so rosy. Yeah, it's all about this 50-day simple. You'll know whether or not they're going to be attacking Brazil, whether or not the 50-day simple moving average it breaks. Okay, so if it remains resistance, that means the bulls are still in charge, and it's still, you know, the emerging markets outlook is still strong. But if you see the 50-day simple moving average for BZQ short Brazil turn into support, that's your clue that the big players are now thinking that the emerging markets might not work out so well for in the short term. And so that's your clue that it could possibly heat up, and then you'd be looking for a run up to that 100-day simple moving average and that recent high close, that $8 level. Okay, so we're just keeping an eye on it. You know, who knows what's going to happen? The markets are at a very important part. The indices are at a very important level on the charts, and the pattern that has been forming for the last couple months is coming to a close, and a new pattern is going to emerge very shortly. And so we're either going to get a breakout or a breakdown very, very soon. You know, tomorrow or next week. You know, most likely next week we'll see a break in the current pattern. So the markets are either going to break out or break down, in my opinion, in the next few trading sessions. And so keep an eye on LABD here. You know, if the markets do break down and take a little breather, then you're looking at the middle Bollinger Band here at 317 is the key level to break. You know, this has had a nice 3-day run. It closed above EMA 4 yesterday, and then today it closed above EMA 8, and it's hitting EMA 13 at 305. If it gets above EMA 13, that's a signal that's really heating up. You know, once again, for these inverse ETFs, this is a bear ETF. This is shorting the biotechs. You know, and we all know the biotechs have been running super hard, and this is the biotech season, and so it would be a major red flag if this did get an uptrend going. But it just caught my eye. It's heating up. Let's see if it gets above that middle Bollinger Band at 317. If it does, that could signal some possible pressure coming for the biotech sector. Okay, so thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check us out at our chat. I'll post the link below the YouTube video. As you can see, check out PSAR one more thing. Notice how the green dots were above the candles. They flipped below today. And then if you look at MACD, there was a bullish crossover on the 8, 13, and 5, and the 12, 26, and 9 is pinched. So they're all signals that they're, it's trying to get a reversal. Doesn't mean it's going to happen. Okay, thank you.